everybody, it's Joey the Greek with the second installment of price action. And today we're going to talk about SR, known as support and resistance. Understanding this will make you understand more in-depth price action theories and concepts easier. This is the building block, and this video is going to be the start of the next few videos that I'll be releasing. That's going to go more and more in depth on this theory, and I want you guys to understand the basic support and resistance before we move forward. So we're going to talk about today are clear setups / clean breakthrough through either support or resistance level. Retests, the more touches in the same direction, the weaker the level gets. So the more touches on a support level or resistance level, the weaker it gets. Best setups are from the first touch of either a broken support or resistance level, and I'm going to show you guys that in the charts. What dictates a level will be support or resistance in future price action is to look at recent PA, which stands for price action. So, structure leaves clues. You always want to look to the left. Higher time frame, which is HTF, for quality setups. Lower time frame for more occurring setups, 5-minute, 15-minute chart, 1 hour. So the higher time frame support level is going to make much more of an impact when it touches rather than a lower time frame, because the directional bias could be let's say long on a higher time frame, but on the 5-minute you see a retest going short. So keep that in mind, because I prefer scalping. So I'm more of a lower time frame type of guy, and everything I teach is probably going to be it can be used on the higher time frame, but you'll deem scalping and swing trading as a better option for what you learn here. Higher time frames are key as our levels. I just stated that, and we're also going to talk about what's very important is Fibonacci, which is short for Fib, support and resistance levels, which not too many, I believe, people really talk about. Fibonacci is a great tool for added confluence, but I'm going to show you guys in the charts exactly what I mean as it being support or resistance. So let's minimize that, and let's look at the charts. Here we have a 1 hour chart, Euro USD. I'm using Tradingview. You could also follow me on Tradingview. My name is Joey the Greek. I usually post my ideas, scalping ideas, and long-term analysis on both crypto markets and Forex, primarily Euro USD or British pound versus the dollar. But I'm liking looking more into crypto. So let's go here. So we have a great example of support and resistance. Let's look at resistance first. I drew a trend line here. As you can see, 1 touch, 2 touch, 3 touch, 4 touch. It ended up being 4 touches followed by a breakthrough. So we have the more touches, the weaker. All right. We see here that we broke through. We just wicked. Candle closed below. We had an impulse move lower. We see that it was very, very, very strong. We touched again, followed by going a little lower. But on the fifth, we saw a massive breakthrough up. And like I was saying, the first touch is always the best touch, the most probable. So we saw the price rallied up to about here, followed by a pullback to right here, and that was the very first touch of this resistance turn support, rally up. The second time it broke through, retest, followed by it going lower, consolidated here, another retest, boom, going lower. I highlighted this area, this shaded area, as support, but there's something different about here that I didn't really talk about over here, so we're going to talk about that. But before we do, I'm going to bring up the notepad. I want to do quick paint for you guys. So paint, Boom. All right. So I want to just do a quick drawing for you guys. So this is how, in an ideal world, once you get more accustomed to looking at charts, we're going to upgrade. So we see price rally, followed by going down, up, lower, up, lower. We deem this as support. We deem this as resistance. So we see price hit resistance again, breaks out of the range, closes, the candle closes out of the range, which is a clean break, followed by a retracement, the retest, first touch of support, bounces off of resistance, continuously going lower. So that's the main idea. And also you could flip it for going the opposite way. So let's see if we can go to another page. Don't really use this too much file. All right. So we can also the other way. Price is consolidating, support, resistance, support, resistance, support, resistance, breaks out of resistance, boom, first retest. First retest is always going to be the most probable. Could bounce up, taking out this high, followed by going lower. Could bounce again. Let's say it doesn't take this high out, followed by boom. You'll see that happen a lot too. So the first touch of a level that was very difficult to break out of in previous price action will always be the highest probable. So that explains that. So let's close out of Paint X Light. Let's go back to the charts. So I deem this as support. We can see that price bounced every time it hit about this level. Now, let's zoom in a little bit on this 1 hour. We can see the price bounced, continuously bounced. It was in a range. This is actually recent. So it was in a range, and we see the retest here. And today, what's the date today? Today is January 21st, Monday, January 21st. So we could arguably see Euro USD continually trade lower going from here. But why did I deem this as an area of support that I knew that price was going to bounce? If we look, we want to look at this area right here. We're going to go to a higher time frame, 4 hour, and if we look right here, we see this candle right here, and this candle right here. After this candle, we see a large rally up. After this candle, we see a large rally up. We see this candle, this closed candle, dip into this one, continuously rally up. So we won't. So there's something very important about this candle and this candle. And as we trade lower, this candle. So we're about the halfway mark on this candle. So most importantly, I want to go over, without giving too much detail right now, about those down candles before the large move up. So that was the basis of this video. I wanted to get you guys to understand support and resistance, get an idea about it, because now in the videos going forward, we're going to be talking about the candles, the candle before the large move up. And you'll realize as we go on with the series, everything will start coming into place. Now we're going to go over the last part of this video, and that is Fibonacci. support or resistance levels. Because price is actually price, I believe, follows an algo, and the algo is very sensitive to these levels. So we're gonna be looking at a Euro USD chart, daily chart, and I want to show you guys the way I have Fibonacci set up. So the 50 level is very important to me. I changed the 61, I believe, 0.8 to 62, and the 78 point something, I forget what it is because it's been so long. I changed it to 79, so that's rounded up, and I don't use the 70. It's not part of the way I have fib set up. So what I did was I ran the fibs from this swing point down to this swing point. So that's the range I'm looking at on a daily chart. And I'm going to adjust it just so you guys see about this right here. But what I want you to see is from this level to this level, we see price rally up right to the 62 level, and it was very sensitive at that level, and it pushed away. All right, try to come up again close to that level, pushed away. We can see one more massive candle, so a wick, rejected at the 50 level here. The 50 level followed by going lower. We're gonna change the fib setup so you guys have an idea. But these are very, very sensitive levels where we can expect price to have some sort of reaction. So if we look at from here to right about here, so this swing point here, we see that price is very sensitive at the 50 level, touches the 62, bounces away. Fibonacci is a very great tool. It's one of the tools I use the most. And it's actually a great scalping tool, which I'm going to be revealing some secrets in the future. It might not be for free though, but it definitely changes a lot of things on the aspect of trading. So let's look at another example here. We're going to use this candle, and we're going to go to the top of that candle. So we see price retraces, get sensitive near the 50 level, doesn't exactly touch it, go below, wicks through the 62 level, rally up, comes back again to the 50 level, and that's all she wrote. Boom. We see the impulse move higher out of this range, this consolidation here. If you guys remember my previous video, this is the accumulation, distribution, unload, rebuy, distribution. So everything goes together. So what you guys can do is use your fibs and run the fibs the way I did, and see how this works all throughout the charts. I mean, there's a lot of rules I use in place when I use the fibs that I won't be diving into here, but it makes using it a lot easier. But just keep in mind, Fibonacci is a powerful tool, and it's a tool that I believe is beneficial in trading.